ask you each, with the exception of your good self, Professor, to introduce yourselves and say a little bit about your background, and then what you're thinking about and what you're working on at the moment. And as you're near, we'll start with yourself.
Okay, thank you very much. My name is Aleksander Panasuk. I'm one of the co-founders of the Stablecoin Foundation, Stable Report, and also working on one of the first potential regulated crypto banks in Germany. I'm here because I'm very passionate about stablecoins. I've been working on it full-time pretty much for 8 months, trying to get the industry to collaborate, get together to create a professional, not-for-profit association.
Thanks, Alex. Hey guys, my name is Tatiana Kaufman. My role in this space is to help folks create and execute strategies for digital securities. So some of you have heard of the term STO in this last panel. So think of it as digital bonds, equities, derivatives, and such. I started to get focused on stable coins with this current project that I'm working on with Full Cycle, where we're creating a digital green bond. And I thought, well, how are we going to pay out the coupon payments to our investors? And we didn't want to do it the old school way where you mail a piece of paper every 6 months because it's not cost effective. And I started looking at other digital assets that we could use as a way of payment, only everything else was volatile, too volatile to actually pay out anything meaningful with. So fell down the rabbit hole of stablecoins, and here we are.
Hi, my name is David Fauchier. I'm the CIO of a firm called Cambriel Capital, where we run what's known as a fund of funds strategy. Our role is basically to research, find, analyze, due diligence, and then invest in what we consider to be the most promising crypto funds across different strategies. More kind of pertinent to this panel, I have a little bit of an obsession with stablecoins. I've been researching and investing in the space for a number of years, and stablecoins is sort of the best mix of all of my different interests. So I may throw out some kind of controversial opinions, which I may not really believe in, but it's always kind of fun. Yeah.
Good. We obviously had a terrific introduction to your good self, but I'm actually going to start by asking the panel, who most vehemently disagreed with what they heard in that presentation?
I would like to say one comment, with all due respect, Professor. I think we don't really know what the evolution of money is going to look like. It's really incredible to see, I have to say, I've been working on this and I've been in touch with almost 120 issuers of money. And to see it being reinvented and going through another evolution is just incredible. And there's so many different thought leaders out there looking at different approaches, whether it's on the credit money theory, quantitative theory, modern money theory, from an economic perspective, but also looking at it from a technology perspective. How can we leverage the innovation of blockchain and decentralization and a lot of things that have been out there, like cryptography. So the perspective of with such a hard position on it doesn't work. I think we really don't know right now, and we're seeing so many projects and smart people out there that I think we have to give them a chance and to see what actually does.
You are so much more polite than you were down there. That's awesome. No, I don't mean that. But actually, let me ask you the question just before we go on. Yeah. What's really important when you're thinking about it? Stablecoins.
A stablecoin, I think, the model, what stabilizes it? How does it, stay relatively stable and according to what? A model. Really, the market will really decide what's stable. There's so many things, like you mentioned the Black Swan event, which is the most famous event that people refer to. But, I think that these projects really have to, prototype and use and see what happens over time. And so we don't know.
Yeah. Does anyone want to, other than your good self at the moment, want to comment on Tether? Because Tether is terribly interesting as if it goes down, then actually the crypto industry goes down for a bit, probably, right? So does anybody want to comment on the auditing visibility and transparency, for example, of Tether?
Yeah, so Tether was really the trailblazer in this space. And I was close to the project for a while. And, I think you have to give them kudos for having the vision to create what they did. Great. Right? But the problem is they vertically integrated all of the checks and balances, right? So something like Trust Token, TrueUSD, when they came out, they were supposed to be the antithesis to Tether. And they said, okay, the issues with Tether was that they had their own bank, right? So we're going to work with third-party banks to make sure that our books are always balanced.
Independently audited.
Exactly. So, but now Tether is so integrated. The exchange with the largest volume right now is Binance, and Tether is integral to my everyday trading. I don't know how about you, but given all the issues, Tether just makes my life so much easier that I still use it every single day.
Are you at all concerned at the auditing standards that they currently execute? Does it worry you? Okay,
I try not to sit in it for too long.
Okay, that's interesting. So that's your
The answer.
That's great. So that was a yes.
I use it as an arbitrage tool.
Oh, okay. So for the moment that you're trading, you're using it as an arbitrage tool. That's
Right,
kind of an
right.
interesting
When I
use
wanna be-
for a stable coin.
When I want to be risk off, I go into Tether. When I want to be risk on, I go back into
go
my
back,
assets.
I mean, Professor, did you want to comment at this moment, or are you saving your bullets?
Maybe later, but I just want to say something. I'm completely happy about experimentation, right?
Yeah.
But I'm not going to put my money into it. And I recommend to everybody not to do it either. I mean,
Yeah,
if somebody wants to lose money, fine.
That used to be called venture capital, but moving on. I think another good chance, I think, for David to comment. What are you seeing in the industry when you look at, for example, the presentation we just saw? What's your view of that? Do you have a view?
Yeah, as I said to you, I basically agree with all of the broad points you were making. I think maybe the points where I would disagree are that I think we will see an algorithmic stablecoin work, and you have to define work. I think we can look back at the history of monetary regimes, and actually, if you really think through stuff, monetary regimes actually last for less time than you would kind of imagine. And it's not unusual to see something last for 5 years, 10 years, 20 years, 40 years. But these things are not permanent. And I think that there's a good chance that we'll see algorithmic stablecoins exist because they have one kind of feature which is very useful to them, which is that the supply of stablecoin in these systems actually tracks the demand for them. And this is something, for example, in Ether that we do not see. And so the actual issuance mechanisms behind these is important. And that means that with an algorithmic stablecoin, you can actually scale, in theory, much faster. And what I think we may see is that people use these short term, a little bit like people are using Tether. They don't think that it's going to be around forever. They're not storing value, but they're using them as means of exchange for a minute, an hour, a day, and that these things actually end up regularly sort of failing, and that somehow being okay.
Well, we heard Tatiana speak of her use case. Can we explore some of the other potential use cases, looking on the bright side?
I'd like to answer that one. I mean, I get the question all the time, what's the use case for, short-term position coming in out of your, trading, that's the first proven use case, but payments seems to be the next thing, remittances, pegged lending, there's so many. But honestly, I tell people, how do you use your money today? Cash, and think of that being digital, being, quicker, faster, cheaper, more, accessible. I see anything we use money for today, hopefully in the future, those use cases evolving over time.
I think one of the greatest and most timely applications is going into countries where the currencies are completely unstable,
Absolutely.
some of the developing countries, and actually creating a turnkey system where you can say, now you have a currency.
Kind of a refuge currency stability solution.
Right.
It's a big argument, helping
Yeah.
the unbanked and the underserved.
Yeah. Not the only, but the major issue with that type of system is the centralization of it. So if you put that kind of system in the hands of a dictator and they're controlling the entire money supply and they can turn it on and off as they like, you might be worse off than when you started.
There is an argument that a dictatorship already has kind of a bit of that, except if it's cash or barter.
I have to comment on that too, because this morning I heard Michael talk about what China's doing, and I just cringe. It's like, talk about them controlling digital identity, money, and smart contract transactions and reputation. If they could really, blockchain in that form could actually enhance their power over the people, and that really scares me, and I couldn't, be scared more about that.
I couldn't agree that it was a wonderful, transparent view that we rarely get that kind of opportunity to see. But it's interesting, though, that you mentioned that, because, of course, that's one of the challenges of crypto in general, because in order to control it, you'd have to ban the internet, right?
Yeah.
And that's just not going to happen.
But we should talk about how do we get from a centralized stablecoin to a decentralized version, right? And decentralization, unfortunately, we don't have really fully working from a governance perspective and technology perspective. But that's really the vision. You have the Web 3.0 foundation, and actually in Berlin, where I live, and fantastic foundation, where we are enabling technology to decentralize it for the humanity. And I really get scared when I hear about central banks creating stablecoins, and I found it very. I think it's good in the short term to validate that it is a good idea and that they're scared of losing their power. I found Christine Lagarde's speech, "The Winds of Change" in Singapore a month and a half ago, where they reversed their position on creating digital currencies by the central banks. Really interesting, because now, just last week, there was a report released saying 70% of all central banks are working on a stablecoin.
So why did the IMF reverse its position? Do any of us know?
That'd be a great question.
Is this recorded?
No, there was always this discussion.
Just between us.
No, I mean, there was always this discussion in every central bank. You cannot say they revert or something. I mean, they put up just whatever they think, and
See what people
First
react.
of all, we have to understand, for them, it's not important. We are kind of, because we talk so much about crypto,
true.
we think it's
much
the
more
most
important
big
than
thing.
yeah,
For them, it's kind of a sideshow, total sideshow.
Yeah.
And that's why she probably said, yeah, why not? Let's try it. And so, but there's no intention behind it, like big thing. And if they say 70% of central banks working on say, stablecoin or crypto, central bank crypto, of course, there's probably one guy somewhere writes a little paper about it. That's the reality. I mean, so we should not overestimate this. They observe, and they are going to observe it more and more by now. I think because they see something is going, but they might also go in the other direction. And they might go and say and decide on the G20 meeting or at the BIS in Basel, we have to go. We have to go after it. We have to close it down. There's too much, cheating going on. And I fear a little bit with the stablecoin stuff is exactly the same as with the ICO. There will be 90% just crap. And that's going to put really a bad light on the entire
I have to say, you're holding back.
No.
You're holding back. You should really tell us what you really think.
My experience of the... Sorry.
Yeah, I just want to comment one thing on that. I think you're absolutely right with regards to giving a bad light. There was another article this week released that stablecoins are the new Bernie Madoff Ponzi scheme in cryptos. And, I'm really worried about that, actually. There's a lot of issues that we have to address before we can actually trust digital money. And I think that's one of the things that we really need to collaborate on. There's so many issues that I can share with you on our industry survey that was done in August.
Actually, I'm going to come to that. Yeah. But before we do that, David, if there's some investors in the room. I mean, we've had one view, which was wonderful and clear. I wouldn't put my money in, is what we heard. But if you were an investor keen to experiment, what should you look for in a stablecoin to help you decide whether or not you should buy it?
So to sort of break it down between these sort of three core kind of buckets of stablecoin designs that we have, the sort of Tether model of it's fully collateralized. The business model there is pretty basic. They take in deposits and they get whatever the prevailing kind of savings rate is on that, 1.5%. I think if you've got 4 billion under management and you need a small team to actually do this, it's maybe a compelling business, but it's very easy to understand and value. On the algorithmic side, so I was a very small investor in Basis, actually, which I thought had a 1 in 100 chance of
We should
very
talk
big.
about Basis for a bit.
Yeah, we should talk about Basis. In my mind, you have this. So you have this seigniorage share model in Basis, whereby basically based on price fluctuations, we maybe you end up being the ultimate sort of guarantor, backing it with the capital that you've put out. But you can also receive dividends from this seigniorage share based on where the price is fluctuating around the peg. I thought it's something that can scale very quickly. It potentially works for a little bit or doesn't. You don't know. Ultimately, I think it was a very interesting experiment that got shut down, not for technical reasons, but for regulatory ones.
Well, let's dwell on that for a little bit, because you put your money where your mouth was. You tried, you experimented, you invested a little. Why did it fail? What were the lessons learned?
Well, the public reason is because of regulations, right? And so why did they actually release a 3-token model, right, with 2 of them being securities, when they knew they couldn't get it, regulated. That's one thing. But the other thing is, did they really deliver a working product? Show us the test results, show us the code.
I think the third reason is, they built up this product, they wrote this white paper, and then finally decided, I think the investor probably, I'm not in there, said, well, maybe you need an economist there in the board. Yeah. And they get a Nobel Prize winner, right?
Yeah.
And that guy looked at this thing and said, hey, are you completely crazy?
Sure.
What are you doing? And 1 month later, the thing was closed.
Yeah. I mean, it's hard enough to keep it stable with 1 token model, let alone 3 tokens going up and down.
Yeah.
And,
That's AI to control that.
You have to, since you invested,
let me be very clear. It was a very small amount of money, and I thought it was.
But you have probably background knowledge. What happened? It was really. I mean, I think Taylor, the Nobel Prize winner, went into the board there, and then basically months or maybe 2 months, I don't know the exact. Then they closed.
But it's interesting. They raised the most money out of all stablecoins, right?
Yeah, 150 million.
It's unbelievable. And I talked to a couple of investors here that invest in Basis, and I asked them, why did you invest? What kind of due diligence did you do? Did you really do due diligence? Explain me what you did. And to be honest with you, it's one of the reasons we need to collaborate and share information through a professional association, because nobody's an expert. If somebody tells you they're an expert, please.
But you did do this report. Actually, maybe now's a good time to ask you about that.
Yeah.
You asked the industry, the leading people in the industry, a whole bunch of questions.
Yeah.
Can you share some of the findings?
Sure. It's out there on stable.report or Stablecoin Foundation. Anybody can download it. We basically, as an organization, we reached out as many issuers as wanted to participate in the finding. We had 37 issuers participate in the survey back when there was only 120. And the findings, the top 5 issues were actually, believe it or not, security financial audits was the #1 issue for the industry. Another big issue was exchange listing, liquidity, and also legal regulatory issues with clarity on whether they are actually compliant or not. And what I also found interesting was there's no common agreement on what a stablecoin is. The definition across the industry, we had comments. You'll actually see, the top comments in the report about what they think a stablecoin is. Should we include commodity-backed real estate or not? Algorithmic crypto assets. I would slightly disagree, by the way. There is a lot of discussion on the categories. As an example, you have fiat-backed, you have commodity-backed, you have crypto asset-backed. Then you have all these hybrids, with baskets mixing just collateral, or also with fiat, and then ultimately the algorithmic. So those are kind of where the industry is right now. But ultimately, the only thing that the industry 97% agreed on is it's a new financial derivative. So if we have a new derivative, what do we do?
Yeah, but
how do we regulate it?
In a bear market, let's call it, right?
Yeah.
We've gone from 30 to 238 stablecoins.
Correct.
In a year.
Yeah.
What?
And it doubled within the last 2 months from 120 to 238. People can't believe that.
Something interesting.
I get so many
what
comments.
Is it?
It's the number, at least personally, I think it's the thing that you can point to that's like properly crypto.
I think it goes to
Properly crypto.
Which there is a, no, but like, sorry, I don't mean to
Pretending
defense,
to be
but
crypto.
Tokenizing assets and putting them on a blockchain, okay.
Yeah.
I think it's interesting, but it's not a fundamentally new thing. Stablecoins are fundamentally new. They're kind of crypto native and cool and badass and all of this stuff. And there is actually a genuine need for them. And I think it's the thing that the industry really needs as a fundamental building block. And so I think it's one of the rare things that you can really still raise money from. And so there's a lot of projects, I think, being funded for that.
Well, we need digital money. Think about the economy. It's the oil in the engine. It's the data interoperability in the digital assets and products that we're building. How can you operate your engine without oil?
Tatiana, can you help us think about this a little bit? So what do you think the industry can do to prevent the over-issuance of stablecoins?
I think we're just entirely overcomplicating the whole thing, right? Okay. Like, what is the purpose of money? Money was put into place so that it's easier for us to do barter, so that I know how many shekels my goat is worth versus your cow, And that really is what a stablecoin is. Right now, we're having a major adoption issue in the industry where, we have Bitcoin, we have all of these altcoins, and the regular folks who are just learning about the industry or haven't heard about the industry are looking at this and they say, whoa, 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 I don't even understand. I don't even know how to start understanding this, right?
Yes,
but it's too much, and it has all these tokenomics built in and all of this volatility and all these different network use cases. Like, come on, to a noob, it's too much. But if you go to them and say, I'll give you digital USD, okay. You know, like that's the purpose of a stablecoin.
It's recognition.
That's right.
And the 200-something players in this space are recognizing that we're having an adoption issue, so they're jumping at the chance of becoming the next digital dollar, right? But at the end of the day, it's a myth, right? Like we have to all buy into some common system for it to work. I'm going to plug one of my favorite books right now. I'm reading 21 Ideas for the 21st Century by Yuval Harari.
Yes.
And he talks about how humanity is built on a series of myths, and money is one of them. We simply sat down and decided that our currency was worth something, right?
Yeah.
For a time, it was backed by the dollar. It no longer is. But even before that, before we actually had physical currency, we said 5 units for the cow, 3 units for the goat, right? Like the ledger existed before the distributed ledger existed.
But I don't want to move away from, I mean, I agree it needs to be less complex, but there are some systemic potential problems here.
Absolutely.
You know, let me ask you, does your association have ideas how to prevent over-issuance within stablecoins?
Well, we're debating, right? How can we help the industry? You know,
Should that be regulated?
Of course, it has to be regulated. I mean, but as a security, commodity, or as a cryptocurrency? I mean, I get asked the question, where do you want to be? We want to be a real cryptocurrency. You know, Bitcoin, Ethereum, they're not a cryptocurrency. It's not digital money. It's not stable. You're not going to want your salary in something that's so volatile, or you're not going to want to pay your expenses when it's so volatile. So really, you know, the industry's called it a stable coin, but I like to think about it as digital money or decentralized money in its ultimate form. You know, Bloomberg has said that stable coins are crypto 2.0. You know, it's the holy grail of the crypto industry because it's so complex. And how do we get from something that has never been there before to something that we use every day? There's a whole journey towards gaining trust. You know, the dollar is worthless, but we all use it and we don't understand how it works.
Because of the confidence we all have in it.
The trust, liquidity, everybody uses. The US dollar, think about the debts, but people still, it's still the, you know what, 50% of the the global trade is based on the US dollar. But why? Because it's used.
Professor, do you think it's possible to manage volatility in stablecoins where the underlying assets are just innately volatile?
I think there is this example, the DAI, the work. I think it works very good. I mean, I'm not going to put my hand into fire for it, but so far, you know, the model is solid, and so far it worked. So that's why instead of experimenting with stuff that nobody has done it, why not focus on there are basically 2 models. Both of the models require collateral, either on-chain or off-chain. The off-chain is a little bit more difficult because you need a lot of audits and so to really make sure that these dollars are there and not just, you know, supposed to be there. But if you do this on-chain, like the DAI, you can monitor this yourself. You know, it seems to work, and I think we should put our effort in this direction, right? And the other thing that I really think I have to emphasize again. You know, this crypto space is now 10 years. I love it. But still, this is 10 years. And now we go and try to play central banks. Ultimately, you know, if you want a stable coin, you basically try to be a central bank, right? Okay, there are all these central banks out there. Some are really bad, so ignore them. But some of them are not so bad. And they have a lot of experience how to have, you know, stabilize their currency. Why don't we try to learn from these guys what works and what doesn't work? And we can actually migrate some of this knowledge into crypto space. And that's why, that's the only thing that I say. And sometimes I really have the feeling all these 250, by now 300, tomorrow it might be 500 projects, they just start working, doing something, writing a white paper without looking left and right and say, you know, okay, there are some people out there that have thought a lot, about it.
But it's an interesting name for a stable coin.
Excuse me?
The DAI. It's an interesting name because it reminds me of the Dow, just saying.
I don't know why they had it.
But can I just ask, I mean, there's a question that flows from that. Should stable coins, do you think, have some kind of independent, because it's all new, right? Should we have some sort of independent but human governance to correct the early mistakes that could be made?
I don't know. The thing is, legislation is one thing, right? And then they move just to another country or something like this. I think people just have to be very, if you invest, if you buy some stable coins for some reason, you have just to make your own due diligence and say, is there an audit, in particular for Tether and things that have this off-chain? On-chain is no problem to monitor, right? But if the thing is off-chain, it's the audit. I mean, you have to make sure these guys have dollars and in a very liquid form. You cannot have dollar in real estate, right? If you have to intervene very quickly, you cannot wait and sell your houses. So you have to hold it in the most liquid form, the dollar. And the problem is then you have no business model. That's the big thing, right? If you have to hold your collateral in the most liquid form, you earn 0 interest rate. In Switzerland, even negative rates. So that's the main problem there is the business model. There is no business model. That's why they try to kind of cheat. I'm sure Tether, I mean, I'm not going to claim something which I cannot prove, but the incentive to not hold these things in liquid form is very big, because otherwise it's no business model.
Yeah, no, that's true.
But one of the comments on that, how do we hold different things of value? So I like to always relate cryptos to the real world, right? I couldn't agree with you more that we need to leverage traditional finance, banking technology to cryptos, because people who are just in cryptos, they kind of get, siloed thinking, right? They think that it's this way, that everything has to be on the blockchain. No, blockchain, money, stablecoins, they're all a part of an ecosystem and an overall architecture of how things work. And I think what's really important is how we address that, right? And, I agree with you on that point.
Before I open it up to the audience, I wanted to ask the question about regulators' approach to stablecoins at the moment. Do any of you have a view of a good regulatory approach to it, or is there a lot more work that needs doing? Who wants to take that? David, go for it.
I would like to stand up for the regulator in this particular situation. Our experience of the ECB has a fantastic crypto working group. And they very kindly invited me to come and talk to them a year or so ago. And I did, and I had brought dice, and I had this whole game to try and explain how proof of work consensus models basically work. And I sort of turned up, and we just had a really, really intense discussion about the limits of my knowledge in crypto. And my experience of regulators, not just with the ECB, but other central banks and other regulators, in certain, especially when it comes to money, and specifically not taxes, interestingly. But I don't know why tax authorities seem to be far behind where the actual financial regulators and central banks are. But firstly is that they're incredibly well informed, that they see their role as a regulator to nudge the direction rather than to go out and ban things. They see these things as ideas and technologies, and it is not the regulator's role to go and shut them down, but rather to try and nudge them in a direction that is more better for stability, basically. And so I have much more faith in regulators not sort of screwing it up and this trope that we have in crypto than I did 2 years ago.
It's encouraging their talking to the industry in the way that you've said, which is...
I think they spend a lot of time on it. They're very involved in it. They know, they understand what's going on.
Do you engage with...
When you say they, I mean, which regulators? Because I think they're all at different levels, right? Some have sandboxes, like in the UK. Others don't, right? And they really need the hand-holding and...
Specifically on this subject, it's been the ECB. And so the ECB write the working papers that go out to the other European central banks to inform them.
Okay.
And the quality of the research and the material that they're putting out, I think, is very high.
Is that public, that? Or
I
is it
don't know.
internal?
I mean, they've sent some to me, so I guess it must be.
Share. Very cool.
Sure.
Please do share that with us. We'd love to
I'll
share
check
that
if
with
I can. I'm sure I can.
Professor, does the regulator approach you for guidance?
I mean, I see basically a little bit what central banks, how they think. So, and my impressions is right now they don't distinguish, between Bitcoin or Ether or some stable.
It's all that dodgy stuff.
And in particular, the further up you go the ladder, the less they know, in fact, and the more they are basically. It's just it. My impression is sometimes they still have the Silk Road thing in their head. That's where they're stuck. If you go down the ladder, you see quite informed people that they understand the topic, how it works. There are actually quite a lot of fans there too. And But I don't think that we can say now, okay, they're going to be friendly towards stablecoins and unfriendly towards Bitcoin or the other way around. I don't think that they distinguish that much right now.
No, all we want really is a far better understanding and no knee-jerk reaction policy making.
I mean, what is clear about stablecoin, it's a promise. If you're a firm, you issue a stablecoin, you make a promise. That's why it's almost looking like a security, right? And one thing, you know, you almost are a bank, because what is a bank doing?
Correct.
Right? The bank, you bring kind of the currency to the bank, and the bank just gives you a liability, and that liability the bank has produced, and it's a promise to give you back currency at a one-to-one exchange rate.
Yeah, basically all issuers are private banks of their own money. And, you know, do you think it's a security, commodity, or should we try to treat it as a currency?
I just know in Switzerland it would require a banking license if you want to issue a stablecoin.
You could look at
I think there are some people here that issued stablecoin without it, but this kind of slipped through it. But if they get big, they might get into trouble.
And they could always remediate and fix, couldn't they? Tatiana, you
Yeah, I think it depends what it's backed by, because it's either a derivative or a share in an index fund. If you don't want to be a bank, those are some other ways you can look at it.
You know, the thing is, do you make that promise? Do you establish and say, I'm going to guarantee that you can get it back that for $1? That's the thing. If you don't say anything, then you're fine, right? But the problem is, you know, the guy who buys it from you, he probably wants a statement from you that you guarantee the price.
Is there a role for this type of instrument in developing countries that are currently dependent on other people's foreign currency? Let's say that you have a crop production or something. Could you peg that to future production?
You know, actually, there's a lot of stablecoins out there. One of the most interesting that came to my London event was based on renewable energy. You know, it was stabilized based on the fact that the sun is always coming up the next day and that there's energy.
In some places you can count on it.
Some are based on oil, which is not renewable. The famous one is the petro. I know there's a stablecoin out there here, and so people, what they don't understand is it's stable relative to something of value, but the U.S. dollar is not stable. Right, but we still use it, and we peg it to something that we trust and we understand. So I agree to you that it's really popular right now because people understand it, and we think it's worth something. But there are other things that are volatile. So if it's something, let's say there's a stable coin backed by diamonds or by other commodities, is that stable?
Crop production.
Yeah, there
certainly not stable.
There are actually stable coins that are backed by wheat, or baskets of commodities, that we have futures for, right?
So again, you're making an index fund.
That's right.
Derivatives.
Yeah, exactly. It's a new derivative. There's so many different forms of stablecoins. It's really, one is based on the IMF drawing rights. I mean, there's pick your. Here.
Just if anybody's interested in learning more, I think maybe the foundation would be a good place to reach out. Can people reach out to you?
Absolutely. They can reach out to stablecoin.foundation. Reach out to me personally. It's a not-for-profit professional organization, and we're happy to funnel, connect people. He
wants to keep all of them.
This is a distribution of wealth issue.
Yeah, exactly.
Please put your hands together and thank our final panel. They were amazing. Thank you so much.